if or when rates drop, there will be some pressure taken off of demand. Last week, we saw rates go from 8.03 down to 7.4. Just that move in 3 days has been enough to take mortgage demand up. Matt, what do you think? Rates matter? Is this just more evidence that rates matter? Folks, now we have recent data, as in this week. We've talked about historical data, and we have yet reminded you time and time again that if or when rates drop, there will be some pressure taken off of demand. Last week, we saw rates go from 8.03 down to 7.4. Just that move in 3 days has been enough to take mortgage demand up. And we are seeing it. I'm seeing it already. I've had people calling me, Michael, you won't believe it. Mortgage demand, my business is up. And again, it went from being crickets to up. But Matt, what do you think? Rates matter? Is this just more evidence that rates matter?
Oh, yeah. More evidence that rates matter. You and I both know as rates go down, demand will come roaring back. And so that's why, a lot of us are rooting for, hey, let's not have too dramatic of a rate change. Because our buddy Mike Simonson from Altos Research, what he said, I really, really believe that people are more sensitive to rate change than they are to the rate. Rates have been higher for longer, and we're used to 6, 7, 8, just elevated interest rates. Where you see, a consumer make a decision or where you see action is when they change. So going from 8 to 7.4 is where, oh my gosh, some people come off the sideline. Some people pick up their phone. Some people fill out the application, which goes to mortgage applications up week on week. And so there's so many different dynamics going on. I think that, I don't know if it's just the people I talk to or if guys like me and you actually, make a difference. But I feel like there's more and more people saying, you know what? Maybe these guys are onto something. Maybe now is the time to buy. When rates are higher, competition is down, I can get a better deal. And then if rates go down in the future and there's a frenzy and there's a bunch of people competing, I don't have to compete. All I have to do is pick up the phone and go, hey, I can get a 6.5% interest rate. Let me refinance something I bought in December.
Yeah. I mean, again, so where did this belief come from? We saw this last year, folks. Last year, rates shot up to 7%. The market stopped. I talked to agents, real estate agents, mortgage, it stopped. Then rates fell to 5.99 and stuff got wacky. The rate of change matters. Then we run up to 8%. It stops. We take a shockingly big drop, 4 standard deviation move down in 3 days to 7.4. And just those 3 days, demand goes up. That is what your point about Mike Simonson and you and I are like, dude, I want to be clear. I do not want rates to shoot down to 6.5%. I do not want that. Because I think that is the psychological number where the consumer goes, I'm getting a deal. Consumers are very simple creatures. They want a deal. They want good value. And in a world where your mind remembers 8 and you see 6.5, that's a deal.
Yeah.
And if you're doing that with no inventory, game over.
Yeah. I was just going to interject real quick. My advice, and tell me if you agree, Mike, if you want the deal, go get the deal on price. Because you get the deal on price now, the mortgage you can always change. But if you do the opposite and you say, I'm going to wait for 6.5, I can't say this with absolute certainty, but it's what I think from what I see and all the data that I have. If rates go to 6.5, the house that you could get this fall at 500 is probably going to cost you 530 or 540. Whereas you buy it now for 500 and then you renegotiate the mortgage interest rate. Some people will do it twice. Some people might write a mortgage at 7.5. They'll refinance it at 6.5 if it's big enough and it makes sense. And then if rates continue to go down and they're down to 5.25, refinance again then too.
Yeah. At the end of the day, I have evidence. We did it last year. I'm trying to do it again this year. Buyers, I hope they hear me. Buyers today have all the power. That will not last. If we have rates go to 6.5, if they go to 6.5, buyers have zero power. Zero power. The sellers will have it all again. And if you don't remember what happened last time sellers have all the power, let me remind you. Everything starts at list price. You start having EMDs being waived. You start having appraisal conditions waived. You start having inspection conditions waived. You can't get it. Folks, I hope you hear this. You want to buy great deals when you have the power. Motivated sellers. The fact that sellers probably still think 8% is out there is good for you. Don't pay list price, get seller credit, get rate buy downs, get inspections, get seller credit, get everything you can today, because you can only do that because you have the power. When it's a seller's market, which it would be if we go to 6.5 in Q1, you have zero power. Zilch.
Right. I've just got evidence after evidence after evidence. If relatively affordable Sacramento compared to some of the Bay Area and other places is got listings that are sitting, $500,000 houses that are sitting for 30 days or 45 days. Ryan Lundquist from Sacramento quoted a real estate agent partner that said, there was no in between. We went from 14 days on market to 30. And that might not be the average, but that's what they're seeing in the stuff that they're selling. Like, it jumped real quick. That is a position you want to be in as a buyer, having a seller go, oh my gosh, will this not sell? Am I going to hold this thing through winter and maybe have to pull it off and think about renting it or doing something different? Like, that feeling of a seller, call it desperate or call it whatever you want. They're willing to negotiate. You want to be on the buy side during that season.
Absolutely. If somebody wanted to reach out to you, one of the things that people have to do today is work with a mortgage professional that is really willing to run multiple scenarios. Because when you can marry a mortgage broker and all the options that you have, knobs and levers, with writing the offer, that's how you maximize your return and maximize your yield. How do they do that with you?
Go to greatmortgagebroker.com, fill out the form. We're in 48 states and we're happy to help. One thing I want to tell buyers too is there's nothing that you can research or nothing that you can find that just says the best option is a 2-1 buy down. The best option is this. You have to tell your scenario to somebody who's got enough experience and knowledge to say, based on you, your goals, your credit score, your purchase price, how much seller credit you can get, put all that stuff into their knowledge bank that they've built over a decade to say, you know what, in your scenario, I would take that 17.5. I would do a 1-1 buy down. You're going to have a 1% lower rate in both years 1 and 2. Take the extra credit, use that to offset some of your costs. What that's going to do, your cash to close is this. You keep $20,000 in the bank. You've got some reserves, and then the client goes, great. Or the client says, oh, well, you know what? I didn't tell you I'm getting a $50,000 gift, so I'm going to do this larger down payment. These are the conversations, Mike. I am passionate about it because people need to do it. This is as important as anything else for your financial future. How you structure a mortgage, how you game plan, how you go about it. And in a time where you can actually have a say in how it's structured versus offer them whatever they want, waive all the contingencies, give away your firstborn child. We're not there, thankfully. We're in a season where you get to write the rules, have somebody on your side who helps you write them to benefit you and your financial future. You're going to win. I'm excited about it if you couldn't tell.
No. GreatMortgageBroker.com. Get in the mix. See what's going on. Thanks, buddy.
Thanks, Mike.